If the United States and Iran go to war, it won't be just a political crisis, it will be a global financial shockwave. Today, markets are already trembling, and investors are adjusting positions in real time. Here's how a US-Iran war would ripple through global finance, and what it means for your money. The most immediate impact is on oil prices. The Strait of Hormuz, a narrow waterway between Iran and Oman, is one of the world's most critical energy choke points, handling roughly 20% of global oil exports. Any conflict that threatens this route could dramatically reduce supply. Analysts warn Brent crude oil could spike toward $80 to $100 a barrel, or even higher if supply routes are disrupted for weeks. That matters because oil feeds into virtually all sectors of the economy. Higher crude translates into higher gasoline prices, higher shipping costs, and broader inflation pressures. Central banks, like the Federal Reserve, could be forced to delay rate cuts or even tighten further to combat inflation, affecting borrowing costs for households and businesses. Stock markets are already showing signs of stress. Global equity indices have dipped as investors reassess risk, with energy and defense stocks climbing while consumer and tech sectors soften. During past conflicts, markets have shown a consistent pattern. Safe haven assets like gold soar as fear rises. Currencies tied to risk sell off, while the US dollar and government bonds often strengthen. Volatility spikes, with indices swinging widely on each geopolitical headline. For investors, this creates a dilemma. Rising oil and inflation can erode real returns. Equities may struggle in the short term. Bonds might rally initially but could suffer if inflation expectations climb. Safe havens like gold and defensive stocks typically outperform. This is not just a Middle East problem. It's a global financial issue, because in a connected world, energy disruptions affect inflation, interest rates, corporate profits, and consumer spending everywhere. The bottom line: a US-Iran war could shift markets fast, and not always in predictable ways. Understanding these risk channels now can help protect portfolios before fear becomes panic.